Hi everyone, it's Sean from STK Markets here. We've got Michael Hudson, the President CEO of Southern Cross Gold. Just for an update for our investors, we've all got a lot of shares in Southern Cross. It's been performing well over the years. It's had a little recent pullback, which we view as a buying opportunity. So we thought it prudent to give you an update of all things Southern Cross and why we still think this is a screaming buy, even at these levels. Mike, thanks for joining. It's good to see you again.
Sean, always a pleasure.
Mike, we know you've been very busy with the project. It's in a tier one jurisdiction. You've got major shareholders, which are institutions. The hit rate is just phenomenal. Can you just go over why that's so important for the company?
Yeah, so since we last spoken, Sean, we've done lots of things, and the project is very much advancing rapidly. Time is our biggest enemy here, and so we're trying to shortcut a number of things. No doubt that the hit rate is world class. We don't see gold coming out of many deposits globally at the rate that we have been hitting for the last few years. So I think that weight of evidence is very much in everybody's minds. We've got an exploration target at 2.2 to 3.2 million ounces, 8.5 to 10.6 grams per ton gold equivalent. There's very few tier one multi-million ounce 10-gram deposits on Earth. That's very much a fact. So we're in a very rare club, and we're only a very small part of the way through this discovery. But the project now has pivoted to where we say, well, okay, we've got the scale now. We've made it big enough to at least start looking at what this could look like as a mine. That means we need a lot more drill out, and that's the biggest time limitation. So we've got 9 rigs today. We're going to 10 rigs, and we're permitting a decline. If and when we get that decline permitted and constructed, which we're aiming for mid next year to have that constructed, then we can bring another 12 rigs underground. There's very few projects worldwide that have got 10 rigs on them as a pre-development project, let alone 22. And that brings the drill out to a significant resource and a project that we can engineer, put parameters around much quicker, drilling underground and drilling 24/7 with more rigs. Is that basically it's 3 times as fast. So it also de-risks the project from an environmental permitting point of view, because we're progressively permitting, and also de-risks it from the geological and resource model. We're getting underground and seeing it, mapping it and sampling it and making sure it holds together like we see in drill holes that may be 50 meters apart. So we're confirming our interpretation. So that's the plan, is to run through 200 kilometers of drilling, the decline, engineering studies. That's what we've funded the project for. So we've just raised $162 million in May. So we have a treasury now to execute on that plan. And the only other part of that was that I just touched on. We've got $20 million set aside for regional exploration to explore the other 90% of the trend that we haven't, along strike. So this is a series of old mines that everybody knows that we've only looked at a small part of that. And also even today, we're drilling holes down to 1,800, 1,900 meters, which will see a 500-meter test below the current exploration target area that we're infilling.
That's one of the key things that initially got us interested in Southern Cross 3 or 4 years ago, was that the comparable to Fosterville, where they go deep, and that's where the Swan Zone was. They had a lot of gold like you up in the above 1 kilometre region, and you've got a lot of gold there too, which is where your studies have been done for your economic targets. Exploration targets underneath that, though, is where they hit the mother lode. So you've got drill holes going down there at the moment, do you?
We do, and we've seen the deposit become very good, from about 500 meters or from 400 to 500 meters. That transition where we start to see these very high grades of gold that have defined this project over the last few years. But the geological optimism, but the geological reality is that we mightn't be in the best parts of the system yet, in which we've drilled down to 1 kilometre. So we know that Fosterville, as the peer next door, is drilling holes down towards 2 kilometres now. So let's see what happens down there, and whether with a couple of holes we can test that the system continues, which is the main aim. So the rails of the ladder continue down into the earth, and let's hope we can hit one or two of the rungs of the ladder, which are the veins, which is a bit harder because we're drilling for the system to continue the rails. So we're drilling somewhat parallel to the rungs to get those deeper holes. But you never know until you test it. And let's see what's happening down there. It will add substantial resource potential to the project, of course, if we can define those rails that continue.
One of the things you've said, it's about the grade. Obviously, grade is king. 10 grams plus. Pierre, the song, was buying some last week. He thinks it's 5-6 times the day from here, which is why he's buying at these levels, which is great to hear. But that the grade is king. Where you're sort of focused on, though, is the highest margin business. And we've had a couple of naysayers that when you go deep, it's going to be too expensive to mine. Well, you've got Fosterville that was one of the lowest cost producers, which is the highest margin in the world at these deep levels. So it's already been proven you can make a fortune going deep. And the economics would be very similar to Southern Cross if that was the case.
Yeah, well, mineralization does start at surface and mines develop down, and it's all around the continuity of the gold and those grades holding together, which everything we see so far in terms of the geostatistics and how our geological models holding together as we drill more and more. We see as we collect more data, we can be less conservative around some of the parameters we're putting on those high grades because the weight of data, again, informs us that we were being too conservative in the past, which is the way we should be and way normal resource models come together. You never want to put the optimistic viewpoint out there first. So we're seeing it hold together. We're seeing the assumptions that we're making in the past, they were conservative, so we're able to release those a bit. So that means that the grade is only getting higher rather than lower when some of those things happen. So yeah, mining cost, I don't think anyone's engineered this project like we have. And we know that from some of the earlier work that we're doing now that we're getting very good conversions from the resource into mineable ounces, getting a much stronger view on what this looks like as a mine as we're getting that further data. So incredible what high grades do, like you say, incredible where we are with gold, and we're not using any of the spot prices in any of our modeling, like nobody does in the industry. But the current prices where we're at with the grades we have make an incredibly high margin business.
The key thing is getting there. And from where I've been sitting watching the story unfold over the last couple of years, the last 6 months have been fantastic. You increase the exploration target, which you've quite plainly said on this call, conservative, conservative, conservative. I've read announcements where you've got more gold outside the exploration target. We always see that paragraph almost in every single gold announcement. You had a really good announcement last week from a de-risking perspective. The Metallurgy looked quite good, looked fantastic actually. That's a big de-risking thing for larger institutions. They've already shown their hand in the 160 million, which you were almost 100% oversubscribed, $250 million worth of bids. So there's definitely demand for the stock. The key milestone I think we're looking forward to, and quite frankly, all know Victoria is open for business, that the permitting of the decline will show the market that Victoria is keen to get this project permitted. And that will be the first step of doing it. And we from our research and our due diligence, we're thinking that's not far away. If you're thinking this is going to be finished by June next year, that permitting will have to be very soon.
Yeah, well, you never want to preempt a permitting process because it's out of our hands. We've done the work. We're engaging very closely with government and all stakeholders around the project. We know we've got a very solid proposal, and now we're just waiting decisions. But one thing I can say is that the stats would suggest that the best jurisdiction, the best state to permit a mine in Australia over the last 6 to 12 months is Victoria. And of course, everyone laughs when I say that because the history in everyone's minds is very different. But there's been 4 mines permitted in Victoria over the last 6 months. There's no other jurisdiction that's done that in Australia, let alone few in the world. So the state is definitely open for business for responsible explorers and responsible miners and for the critical metals business, which we are very much a part of with the 20% value of our our mineralization coming from antimony. So we're in a very good spot. We've got a tier one asset, high grade, very few, you can count them on less than one hand that exist at these high grades, multi-million ounce deposits. We're in a gold environment where we didn't have the high gold prices that we've seen over the last year or so with this project. We're in a jurisdiction that wants these projects, wants the regional jobs and high-paying jobs and the income that can come into the state from that these projects can create in an incredible way, and an amazing shareholder base that is supportive of this project and has been for a long time. They see the value in advancing this and creating one of the highest margin gold businesses on earth. And then we're only about 10% of the way through the discovery in terms of the footprint. So there's a lot to very much like about Southern Cross as we sit here today, Sean.
I completely agree. I mean, you're talking about supportive shareholders. Pierre owns 8% of the stock, and he added to his position last week. I mean, if that's not support, that's on the market. I don't know what is. It was 600,000 shares, I think, from memory, or 400,000. So it was a decent whack at these levels. So investors looking to get set at this time, they always ask, what's happening tomorrow? What's happening? Why will there be a re-rating in the stock coming up? So can you just quickly map out the next 18 months, and then we'll leave it at that because we know you're really busy, just to give investors a bit of an idea of the value add, and you've listed a few of them already, of where we can see Southern Cross really pushing to the next level in terms of valuations, which is ideally what investors are here for.
But north of $160 million in the bank. So we're fully funded to execute on the 200 kilometers of drilling to drill out a substantial resource. But I can't talk about the economics of that, but we've got a 2.2 to 3.2 million ounce exploration target. We'll take a subset of that and drill that out to develop 10 years of potential resources. So you really want to build a 10-year project. That will only be a subset of a much larger exploration target area. The exploration target will get bigger. We've talked about drilling deeper holes and we're drilling out that area. So that's the 1.5 kilometers. So that's one thing that we're fully funded for. $20 million of exploration, which is the other 90% of the trend that we haven't seen. So any new discovery, of course, is amazingly accretive as well. And then we'll be going into those economic studies once we drill that core area out around Q1 27. And then the de-risking of the permitting with the decline and everything that brings, and the speed of that drill out increasing with the decline. So risk off in so many ways, and with the added exploration upside that this project is still delivering, is a pretty unique story in a tier one jurisdiction, multi-million ounce deposit plus 10 grams. I harp on it, but there's very few, and these things attract the premiums, and you can only go and read what Pierre's put out there over the last few days about how crazy it is that the XAU and the prices of the gold companies have deviated. So we see a whole lot of value inherent in the gold companies that hasn't been matched with the gold price to date. That, I think, is a good summary and where I should leave it.
Mike, thank you so much for your time. It certainly is the gift that keeps on giving. One of the things I will say is that you are fully funded. There are no more placements around the corner. You've got the next 2 years mapped out. So the only way to get shares is to buy and market. And the way you've done the funding is that there's so few shares on issue for the amount of money you've got in the bank. It's just been a terrific outcome. So the only way to get shares is to buy on the ASX or Chi-X at the moment, or the TSX, where we're listed also. So only opportunities on market. Mike, thanks a lot for your time. No doubt we'll be speaking soon.
Thanks, Sean.